Okay, it's about time, so we will just going to start our lesson for this week, and we might just wait for a few minutes before everyone get in. Let's wait for another 3 minutes so the other can get in and get ready for the lessons. Today the class might be a little bit tend toward to a psychology class comparing to the theory class before, as we already go through so many theory class and we have been through some practical class previously also, and we have go through how to pick the stock, how to choose the most appropriate options, and also how to do the analysis on that to find the diamond and also the options that fit you the most. So now we're going to talk about, we'll go into a little bit on the psychology part, because I think that most of the successful trader will have a very good mental in that they can take, they know that what they are doing, and they also have a very self-esteem and also discipline in their strategy. So I think that the success in a trade or success in an investment, most of the part are hugely depends on mentally, psychologically, instead of just a technical analysis, either on the financial report or also on the chart. That might be a skill that you might require. It's a necessary skill, but that will not bring you to what is that will not bring you to a path of successful trader and investor. Knowledge is easy to gain, but how do we utilize it and how do we simplify it will be the keys. In the future, we will go into a little bit of step by step going into the way of becoming a successful trader and an investor. So just bear with me. Then we will just go through it together, and hopefully we can become a successful trader and investor someday and make some money all together. Let's wait for another 1 minute for everyone to get in. Then we will just start on today's lessons on Be Dumb, Be Rich. Okay, so let's start on today's lessons. So before I start, I will just give an introduction to my own, then so that everyone new then can get to know me in a little bit. My name is Jun Lo, and you can call me Jay or you can call me He Lao Si. And I have 4 years of experience in fund management, 2 years specialized in quant trading, which I built my own custom algo board, and I help the others to manage their fund and make some investment. And during my past few years, my annual return generated might be around 26 to 33%. It might not be huge when you're comparing to those like big potatoes in market that can flip the capital in a years, but I'm very satisfied with the stabilities that can bring me a very good mentalities and also some wealth. It's about the capital size, but not about the. It's all about the capital size, but not about how quick that you flip your capitals. So consistency is the key. And so yeah, still the same. In this class, we are not going to collect any information from you. We are not going to collect any money from you. And this is 100% free classes that we will going to help for every week. And in this class, I will not also upsell you any courses. So just be enjoy with this class. and hopefully we can make some money all together. And yeah, so we will just start on today's lessons. Welcome everyone. So today we are just going to explore a very counterintuitive concept that could transform your trading journey. And the title will be Dumb, Be Rich. And this title might sound very provocative. Okay, welcome everyone. So today we are going to explore a very counterintuitive concept that could transform your trading journey. The title will be Dumb, Be Rich. And it might sound very provocative, but by the end of this presentation, you will understand why sometimes being dumb, or rather being deliberately simple, can be a very smart strategy in trading and also in your life. So this concept, we will not only apply it in our trading journey, but we can also apply it to our life. So it can make our life become simple and also become more successful in the futures. So the be dumb here is not a very bad word. It's actually asks us to become simple in terms of our way of thinking and also our step of analysis, and also we will just remove all those noises that could make a very conflict in our analysis. So I will just talk about how to be dumb, and it could bring us the power of simplicity in the life and also in our trading. This is also one of the most important factors, one of the most important concepts that made me success in my trading journey. So previously I have a very complicated trading strategy, and I have put everything into the chart, and I do all the analysis. I follow every guru. I follow every Twitter news, but somehow I am not success in that period of time. I suffer a lot and I do make some losses, but after I just decided to just simplify it to the extreme, I start to make money. So this will be the most important concept that affect my trading journey, and I hope you can get to know of this before you step into the financial market. Okay, so here is what we are going to cover today. We will start by exploring why being dumb or simplified can actually be smart, but it's not provocative. Okay, and then we will just dive into the less is more mindset. We will just look at how a simple trade can lead to easier money, and finally how this approach can benefit us in the other area of our life. And by the end of these lessons, you will have a clear roadmap for simplifying your trading approach. So let's start on today's lessons. Why be dumb first? The first sections, why be dumb? And I know that you might be thinking, be dumb might sound like a very terrible advice, especially in trading, where we were taught the other that the more knowledge that we have might equals to more profit. But let me show you why this counterintuitive approach might be exactly what your trading needs. So let us look at these two trading setup. On the left, we have what many traders think a successful trade will look like. Multiple indicators, a very complex analysis, and countless variables. And on the right, we have a very clean chart, price action chart with minimal indicator. In this case, we don't even have any single indicators, just a pure naked chart. And previously, I thought that a successful full-time professional trader will have their screen, 6 screens of those in front of them, and it all looks just exactly like the one in the left. But after I tried my best, I just couldn't get to know what direction that the specific price will go to. Because there's so many things that are all messing up together, and it will lead a very conflict in between all the indicator and informations. So here's a tweet. The trader that using the right setup consistently outperform the one that are using at the left. In this case, it applies the same on me. But why? To me, I would say that it's because I can actually see what is actually happening in the market right now without getting lost in the noise. On the left one, I might get lost on what is actually happening on the chart. But like some indicator might tell me that it's going down, but it might be in a oversold or overbought condition, so it might be a conflict in between. But for the one on the right, I can clearly know that it break the previous low and it is heading down. So there will be a swift of structures and the chart is actually reversing in the direction. As simple as that. So this is my suggestions on try to keep your chart simple as possible. You might add in some indicators, but my personal advice will be less than 3 will be the optimal choice. And once majority of them are synchro in the same direction, you might take your trade, you might take your approach according to that. So keeping your chart as simple as possible is able to let you not getting paralyzed by the conflicting signals or overwhelming by the data. So try to think about it. Have you ever added an indicator to your chart that hoping it could improve your trading? But at the end, you only find that you get more confused than before. This is what happened to me previously. I try to add more and more to get more confirmations, but at the end, I just get lost in the market and don't know what am I doing. So this paradox of simplicity versus complexity is not just about theory. Let's look at one of the most successful investor or trader of all time who embody this principle, the Warren Buffett. Let's look at one of the most successful investor of all time, the Warren Buffett. Here's what he said. You don't need to be a rocket science. Investing is not a game where the guy with a 160 IQ beat the guy with a 130 IQ. Warren Buffett is a very great person in the history. Everybody know it, even though we are not in the financial market. He consistently beating the market for decades using this simple principle, so that it might seem naive, but it actually worked. He looked for a good business, buy them at a reasonable price, and hold them for long term. Just 3 simple steps. First of them, analysis. Second, pricing. You buy them at a reasonable price, which is the valuations. Third, hold. Believe in themselves and hold it. That's it. 3 simple steps. And it might be simple to everyone, but not everyone can do it and become as successful as Warren Buffett. It's something that might sound easy and simple, but people just couldn't apply it and make it and become very consistent and disciplined to this principle. So you can just consider this steady state. The company that Warren Buffett holds, the Berkshire Hathaway, have averaged about 20% annual return since 1965, I guess. And this was to achieve without a very complex algorithm or high frequency trading. Unlike that company recently, they are doing the quantitative analysis that they get into the market and out of the market within a second, and they have made thousands of trades, and they need a very professional scientist that can make algorithm and bot that can just try to predict what the market is doing. Compared to those, Warren Buffett case is very simple. His company is doing a very simple investing method without a very complex algorithm or without any high frequency trading. Just simple, consistent application of a basic principle. So what is the lesson that we can learn from Warren Buffett case? Complex strategy doesn't necessarily lead to a better result. I didn't say that a very complex strategy will not bring you to success, but some of the time we just need to become simple, and that will be the shortcut to our success. Some people might be successful with a very complex strategy, but those are very minority. But for us, most of us, trying to become as simple as possible will be the shortcut to success. At least for me, I apply it and then I'm actually making money. Okay. And then we will just look into another example. Okay, this will be an example of unsuccessful traders. And this image might feel very familiar to some of you. A traders or investor that is drowning in data and indicators. That is what I feel when I'm starting my journey a few years ago. Let me share a story about a trader that I mentored before. He came to me with 12 different strategies, 15 indicators, and a subscription to 5 different trading services that those trading guru and also those trading Discord group that provide a very professional analysis of, and also those trade signal. And his result, he was fairly breaking even and might be losing a little bit. Why? What is the reason? Because he followed too many things, 15 indicators, 12 strategy, and also 5 different gurus and 5 different analysis method. And each of them will require a very different focus and skill. Like some of the guru might say that you need to use MACD, and some might suggest you to use EMA, and some might using a fundamental analysis. Some ask you to hold long term, some ask you to hold a short term, and some is giving a signal of short, and some is giving a signal of long. Everything is conflicting each other and make it very complex. And when one of the strategy failed, this trader that I mentor, he jumped to another quickly. And he never mastered any single approach, even though there are so many indicators, so many different strategies, but he just couldn't master any of those. He jumped immediately without seeing any result, so he jumped immediately. This is not a good approach to trading and investing, because you need to be consistent and persistent, and you need to know the result. For me personally, if I want to try out a new strategy, I will use at least 1 year of backtest data. Then I could know that what is the probability that I'm having a losing streak and having a multiple losers, and I need to know the winning rate of my strategy. And also even though after a 1 year backtest, I also need to do some forward testing before I put into real big money. I can just put into some minimum money, and I need to do some forward testing, because some strategy might work for the past but not for the future. So we need to know that some strategy is a cyclical strategy. It might be suitable for some of the time, but not for some specific timing. Like now, the market is very volatile. When you're comparing to previous years, the market is like ranging just in a very tight pricing, a very tight price range. So the strategy that you apply might be different. You might in the previous year, you might just buy low and sell high and do it completely, like repeatedly, and then you can just make money very easily, because there's a very obvious support and resistance. Then you can just do it based on those very obvious level. But now, when everything is breaking high and at the all-time high, actually in this year, a rolling strategy might be better. You can just get into the positions and you make a trailing stop loss and you keep on adding a very small position when comparing to the previous one, and then you just leverage your profit. You're compounding it and then you make the profit even bigger, while at the same time you protect your profit. So okay, go back to this unsuccessful trading example. So when he feel one of those, when he's having a losing streak, he will just immediately look for another guru. He will just immediately jump to another strategy. He never master any single approach, and the attention, the time and the attention has consistently divided to so many analysis methods. And this is the very common pattern that I see among struggling traders. They think that more knowledge equal to better result, but often it's quite the opposite. So trying to juggle too many trading strategy, and you will just suffer from the analysis paralysis. So you need to master one before you master the others. You need to learn how to walk before you learn how to jump. Okay. So this is one of the cases that I have mentored, and he did make some improvement in the result afterwards. Okay, so we have seen that how complexities can actually hurt our trading performance. So, but by knowing that, it's not enough. We need a very practical framework to just simplify our approach. So this is where the less is more mindset coming in. And it starts by understanding a very powerful principle that can transform your trading journey. So everything should be made as simple as possible, but not simple. Trading is simple, but it's not easy. You need to know the difference. Simple is not necessarily equal to easy. Okay, so this is the principle that you need to know. This is also the principle that we call the 80-20 rules. Or you can search for the Pareto principle. So in trading, this typically means that 20% of your strategy will generate 80% of your profit. 20% of the strategy lead to 80% of profit. And trading 20% of your time span will produce 80% of your result. So spending more time doesn't necessarily bring to a better result. Sometimes a quality in the time is more important. And also 20% of the analysis will lead to 80% of the good decisions. So you don't need to put so many things into the chart. You don't need to do so many analyses. Some of them might just be enough for you to make a very good decisions. Okay. And you need to know also, if you are not having if you are those type that are having a very high risk to reward ratio, there might be a case that 20% of your trade can generate you 80% of your total profit. So take a moment to think about your own trading. Which setup consistently that make you money? And which analysis method actually can improve your result? What is the indicator can actually help you and what doesn't? So you will need to do an analysis. You need to journal down your trades and you will know the result, which one is helping you and which one is actually hurting your trading performance. Actually, it's just a handful of core strategies that drive most of your success. So you need to identify your most profitable strategy and the most suitable indicator for you, and you can even use some naked chart. Some say that naked chart is better because the chart itself, the candle itself already bring you more than enough information, and all those indicators are lagging. But it depends. If you are the beginner, then cannot just make the judgment, make the decision according to the patterns, according to candle, then some indicators can help. Like the EMA, the moving average, can actually help you to identify the direction very clearly. Just take a look. At a glance will just make you able to decide. If you take a look at the chart and you can't tell at the first second that which direction that is going, then quit the chart. Don't try to even think about taking this trade. This is my approach. When I'm taking a look at the chart, at that second, I will need myself to know which direction that this trade is going to. If I couldn't tell by the first second that I look into the chart, I will not try to think about this trade. I will not take any trade based on this chart. So a good chart, a good setup is what you can just tell immediately at the first second you take a look at the chart. And if you put enough effort into it, it will become your nature to just tell to just recognize the setup that will bring you the most successful result. Okay. So understanding the 80-20 principle is one thing, but applying it requires a very careful analysis of your current activities. Because if you are suffering right now and you don't know which indicators and which analysis that is actually will lead you to success, you will need to record down your previous trade, and you need to know about what is the reason of failure, what is the things that is holding you back. So I'll just break it down into something that we can actually use. And this is eliminations. Okay. So let's take a look at this practical example of trading activities. This is a typical trader's day, what they will do. Okay. The first one is they will read multiple news resources. So they will just take a look at newspaper, or for now they will just go through the investing.com, the CNBCs, and all those G10s, all those websites that is providing a news, and they will just spend like 2 hours, 120 minutes into all those research. They need to know about what is the market doing, what is the market sentiments, what is the stock doing, what is the company management is doing, like what is the new product is launching, and what is the federal is making any decisions or not. But after they know all of those, they will just go into chart analysis. They will analyze the chart across multiple time frames, and even some of them will just go into the detail of every stock in the market. Can you tell that how many stocks are actually in the market or not? There are uncountable stocks in the market, and they are trying to find the very specific setup among all of those, which is not realistic for me. Sometimes you will just need to focus on a few stocks that will do. You will need to have your own filter. And in the last class, we already talked about how to do the filter on the stock and also how to do the filter on the options. If you're interested, you can just contact me. I will leave my contact at the end of the lessons, and you can just get the recording from me. So that the last class is talking about the first step of making money, which is to filter the best stock to trade for now, and also to filter the options to trade on. Okay, off the topic. So now let's get back to it. After that, they read all the news and they do all the chart analysis. What they will do? They were just following the traders. They will just follow what is the other people analysis. They will read the other people analysis. They will go through the Twitters, the social medias, IG, and also Discord, and they need to know what the gurus think about on those particular stock or those particular commodities. Okay, after that, they know about what is the market is doing, what is the company is doing, and what is happening on the chart, and what is the other guru think about, and they come into a real executions. And you can see that the real execution actually take just a very minimum time when comparing to the other research. And after that, after the trade, they do a journaling. They review the trade and they do a journaling. And among all those typical activities, which one do you think will lead to the success? Which one do you think is directly contributed to your profit? Often it's just actual trading and journaling will help. The most simple part. So just taking the trade based on your own analysis method. Then you note down about your emotions, why you make these decisions. Then you journal it down and you can know the result. These two simple things will contribute directly to your profit when you're comparing to the others. The others will be just noise. They are just making you to, they're trying to make you to think in their way. But every people think differently. So even though you make your trades according to them, according to their analysis, will they profit from it? No. All the profits and losses will be bear by you. So you are the one who will be responsible for your own decisions. And even if you make a loss, will they compensate you? I don't think so. So instead of just reading the other analysis, reading those news and research, just try to make your own decisions, and you have no one to blame, and this is purely depends on you. For me, trading is actually a solo game. Even though a commodity might help, they can transfer knowledge to each other, but at the end, all the monies are belong to you. You are the one who in control of your own actions and also your own money. So trading is actually a solo game. The others can just support you, but they cannot interfere in any of your decisions. And try not to blame the others if you fail a certain trade. This is what I'm going to tell you. And so here comes a real successful story. This is John, one of the trader that I mentored in previous years. The trading setup before and after the simplification. I didn't have the actual photo, so I'm just taking it from the website, the online resources. Okay, so previously, if I'm not mistaken, he have 6 screens with different chart. Some is the telling the pricing, the bid and ask, the allocation of the positions, and some is telling about the market sentiment, the VIX, and some is just showing about the trading volume. And he have 8 technical indicators among 6 of the chart, and he have a three news feeds running simultaneously. So all of those cannot help him become a very successful trader. His winning rate is about 32 to 48%, if I'm not mistaken. And after we have talked through and do all those analysis all together, like we analyze the past history, the past trading record, and we can find that what is the pattern that can lead to a very successful trade, and what is the pattern that lead to the failure trade. We can tell about which indicator is actually helping to increase the winning rate and which doesn't. And do you really need to read for 3 news resources? I don't think so. For me, a news resources is just a warning, alert to myself to avoid from trading those volatility. So one trusted news resources will already be enough. You just need to know about what is the timing of those news happen, so you can avoid trading in those periods. Or you can make use of the news, you can just trade the volatility. It all depends on you. But you don't really, a good result, a good earning report doesn't lead to an upward movement. people might think differently when comparing to you. So do not try to predict the outcome. You can write the volatility, but do not try to just guess based on the forecast. And a good news release doesn't really mean to upward movement. Be aware of that. So some talk about news trading. Some will just place a trade before the news, trying to guess on the direction. But some, they wait for the news release, and after that, he wait for the price to react on the news. Then only after that, they get into the trade. The result of the news doesn't important. What important is the market sentiment, the actual result, the actual outcome. That reacting on the news is the most important thing. So normally we can just try to trade after news. We can just enjoy the movement, the high volatility after a very strong confirmations on the directions. Okay, so go back to the John cases. So after we analyze all the past trading record, we will just simplify from 6 screen to only 2 screen. And then at the end, he removed all the indicators. He just used a pure price action, a naked chart, which is why we call it a naked chart, together with a volume. He tried to use a volume as a confirmation of the trend. So normally when there's a high volume traded, it means a confirmation to the trend, a confirmation to the price action that is happening right now. After we do all those simplifications, his success rate jumped from previous like 32, I'm not mistaken, to 67. Even though 67 might not be as high as you thought it will be, but at least he is in a profit zone right now. So more importantly, the stress level goes down very significantly. He could finally see what is the market is doing, and he can just spend just a little time, and then he can know what is the direction, what is the movement that he need to take. So he don't need a second guessing every move. This is what most important. He can sleep well, he can have a very significant stress level drop, and he can make money. So it helped him in both financially and also mentally. Okay, now that you know that you understand that why less is more, we will just get into a practical meat of this approach. I'm just going to show you exactly how to make money with a simplified trading methods, and you might be surprised of just how straightforward it can be. So a simple trade can just make easier money. Simple trade, easier money. Complexity might sound very professional, but sometimes it doesn't lead to a successful trade. We are not professional. We are just some small traders and some investors, personal investor and traders. So we are trying to just make trade as simple as we can, and then we will just make some money without stressing our life, without affecting our mental health too much. So what I'm going to share next is probably the most important point of the entire presentations, the entire webinars, because this is the one that made me profit for the past few years. This is my way of doing things to turn myself from a suffering traders become a successful traders. Okay, so let's talk about the power of mastering just one strategy. This is a very simple yet efficient approach. So first of all, you will just need one strategy, one direction bias confirmation. You don't need to know about too many things happen in the market. If you take a look at the chart, it is going up, then what you need to do is only long. You only can ride the trend without trying to guess at what point that is reversing. So be frank with the trend, and you can, for myself, I'm actually using the EMA ribbons, which multiple EMA altogether to identify the trend. If all of them are messing together without a very clear direction, then I will not take any trades. But if all of them are lining up all together, then I will just go along with that direction. This is my directions bias confirmations. And some might use price action, the higher low, higher high, higher low, higher high, and the wave, the Elliott wave, and also Fibonacci. These all up to you. But you will only need one direction bias confirmations. Okay. And you only need one entry and exit that can make you successful. There are so many traders in the market, investors in the market, like Warren Buffett. He only used one entry and exit, which the entry will be the valuations on the company. When he finds a diamond in the market, a very good share to trade, then what he do is just wait until the price to drop below the valuations method, the valuations pricing, and he get in only one entry, which is waiting the price to drop until certain level, and that level will be determined by the valuation method. And what is the exit? If the financial report is reacting badly, and if the price is overvalued too much, then Warren Buffett will just exit the trade and go to the others. This is just as simple as it is. For me, I only do one trading method, one bias, one entry, and one exit. As simple as that. And this is my way of making profit, which is mastering one skill. So my advice to you is you might look at the price action at the key supports and also the resistance levels, and you can just wait for a breakout, or you can just wait for a retest on the supports. That might be a very good entry for you. And some might use a volume as a confirmation, but personally I didn't use it. And if you're having a very clear risk and reward ratio, which is very good, for myself, I'm having a very clear risk to reward ratio. Even though a breakout to a previous resistance, sometimes they will just say that, yeah, there's a very potential profit zone to the next resistance level. But sometimes I will just take when I think that this is enough. For me, a very clear risk to reward ratio is important to my case. Don't try to just guess that a breaking resistance level will always lead you to another resistance level. And what happened among it doesn't important. What matter is, are you taking money from the market or you giving money to the market? As simple as that. So no matter it is in the support or resistance, as long as you are profit, then that is a good trade. As simple as that. You don't need any complicated indicators. Previously, I have made multiple indicators because they say that MACD is the king of indicators, so I put it in. And they say that RSI is very good for timing for entry and exit, so I put it in. But I found that all of those MACD and RSI doesn't really make sense to me, even though it's theoretically logic to what should be happen, but what should be happen sometimes might not be what actually happened. Yeah, you need to know the difference. And for myself, I go through a very complicated indicators to a naked chart, but later on I found that naked chart is also not my case, because I'm very lazy and tired at analyzing the support and resistance, like the change of market movement, the reversal, and all those. So for myself, I just put in an email ribbon, so I can tell from the first second when I look into the chart which direction I should do. So as simple as that, I only use one indicators, which is to help me identify the direction. Then later on, I will only have one entry and one exit with a very clear risk to reward ratio. As simple as that. So remember, yeah, it's better to master one setup than just to struggle to learn so many things. Even though you learn about 10 strategy, you follow multiple trading guru, sometimes you might not making as much as money as they do. So having a simple strategy is great, but I also need to pair with an equally simple but robust risk management skill, because making money and also protect, before you talk about making money, protecting your principal, protecting your initial deposit come first. Okay. So this is the risk management skill that I personally using, and these 3 rules to me are non-negotiable. No matter what am I doing, I need to follow it. And you can make your own risk management rules. First of all, I never risk more than 1% of my trading account per trade. So if I lose too much on the first trade, this is the case. If I have $100 and I bet a $50 to the first trade, if I lose that trade, I'm actually losing a 50%. But on the next trade, I only have $50 left. And that $50, we need to make 100% return to just recover back. So you need to know that losing too much at the beginning will hurt you very badly. You need to outperform yourself. You need to perform way better when you're comparing to the previous trade to just recover back. Not to making money, but to recover back. So never risk more than 1% of your trading account per trade. And always use a stop loss. There is no exceptions. You cannot just bet on the market to recover back to your directions. Don't try to make your short-term trades to become a long-term trade. Let me tell you a very simple method. Before you get into the trade, you are at the most reasonable mind. So any decision that you make at that time will be the most correct decisions that you will ever make. So before you get into the trade, make sure that you know at which level you need to exit the trade. You need to identify your stop loss before you even get into a trade. No exception. Don't try to just enter the trade first and then you will just adjust your stop loss accordingly. That is not how trading should work. Okay, so always use a stop loss and determine it before you get into any trade. And the third one, if you lose more than 3% a day, stop trading for a while. For myself, if I have a losing streak of 5, I will just rest for about 1 to 2 weeks. It's because even though I have a very strict SOP to just get into the trade, very strict trading methods, but sometimes my emotion hit me and I might not follow exactly as what I said previously. So if I'm having a losing streak, I will just need to calm down myself, relax a bit. So I just stop trading for a while. It's all up to you. It's all up to how long do you need to just recover back to your normal mental health situations. Okay. So it sounds very easy and simple, but it's not easy to follow. Not always. For myself, I do journal down every trade and I do break my own rules for like 50 times to about 50 times a year. Some roughly there lah. So, but it's simple, but it's not easy to follow. So you need to have a very strict discipline on yourself. And these rules will help you to keep yourself in the game longer. It help you to survive in the market, to just survive long enough until you success. So this is to make sure that you survive first before we talk about making money. you need to ensure that yourself able to survive in the market long enough. Then we only have a chance to success. So trading is not about a game that is guessing, that is ranking based on who make the most money. It's about not losing what you have. The one who survive until the end is the winner, but not the one who make the most money at the beginning is the winner. Do remember that. Okay? Then we will just need a very simple position sizing calculation. Don't worry if number is not your case, it's not your things. I've just simplified in just a few steps that everyone can follow. So here's a very simple position size formula. The risk amount will be equal to the account size multiplied by 1%, and then the position size will be the risk amount divided by the stop loss distance. Like example, if you have a $10,000 account and 1% of the $10,000 account will be $10,000 account will be $100. So $100 is the maximum losses that you can have for every trade. And if you are going to buy a share, 100 share of a particular stock, then you're having a stop loss like $1, then your position size will be 100 share. As simple as that, because you can only lose $1 and you have $100 to lose, so you can only buy 100 share. As simple as that. So make sure that this simple mathematics will just keep you safe. But it depends because this one is actually the case for a very simple stock buy and sell. But if you are going to trade some financial instrument like futures, index, and also options, make sure that you understand how to calculate the P&L before you get into any position. You need to know how much you are going to lose and how big is the leverage will be, so you can just calculate that the size that you need to get into that position. Like for options, like for futures, some of them have a different leverage, a 300% leverage, 500% leverage. So you need to know what is the leverage size that your account is using. And for options, everyone knows that one option is equal to 100 share. So you need to calculate based on that. So simple mathematics will keep you safe, but you also need the basic understanding on those calculation method for every financial instruments. Okay. Now we have talked too much on the trading stuff, the trading and investment stuff. Let's talk about how how the BDOM can be simplify us in the area of life. Okay, because I also find that important just beyond trading. Okay, at this point you might be thinking this simplified approach makes sense for trading because we have already talked too much, but for life it's different. It's very complex situations. Well, I will tell you that these same principles actually could just improve my life. At least I do things that improve my life by using these simple principles. Let me show you how. We have talked about the principle previously and we can apply it in everywhere. Let's look at the example. The first one is the health simplifications. So instead of just trying to make use of all the tools in the gym, instead of just 10 different exercises, you can just having a very good health, a very good body by just master the basic. Where's the basic? In this case, the push-up, the squat, and also the plank. So if you do all those three every day and you master it, I will not say that you will become very muscular, but at least your health get to guarantee at a very healthy state. Okay, so mastering the basic will be more important than trying every true exercise and tools in the gym. And rather than a very complicated diet, you can just follow one rules when you come to having food, which is to eat the real food and not too much. You don't need to measure about what is the nutrition that you get from every meal. You will just need to know. Don't try to eat fast food. Don't try to eat any manufactured food. You can just eat the real food and control the volume. Then your health will be good. The second, relationship. So instead of just having multiple friends, like 100 friends, 200 friends, 300 friends, actually sometimes you will just need 2 or 3 very deep friendship. Even though you have multiple friends, 100 friends, and when you are in a very difficult situations, how many of them do you think will help you in that situations? If you need money, you can just try and ask around. I don't think many of them will help you. Sometimes 2 to 3 true friends, a deep friendship is what you really need when you're comparing to a very shallow connections. So you need to spend a very quality times with your family without distractions. This is what I'm talking about, being simple in the relationship. Instead of doing many things together with the family's members, like you gather all around, but everyone is playing their phone all together, that is not what we call a quality time. Sometimes you might just need like a half an hour, everyone just put their phone away and having a very deep discussion on the current situations, how is everyone doing. That will be the real actions that can improve your relationship with your family members. So quality time is more important when you're comparing to just spending the time together long without doing any deep connection things. Okay. The third one, when it comes to work focus, you need to identify your most productive actions when it comes to work. Doing many tasks doesn't mean you are generating more profit to the company. You need to focus on the tasks that will deliver you to the most result. So this is the thing. You need to identify the most productive task and just do it. And the other thing, you can just try to eliminate those tasks that doesn't bring you any result. Now you can see how simplifications work when it comes to different areas comparing to tradings. And we will just look at, this is what we talked about just now, the health, just focus mastering the basic, the push-up, the squat, and also the plank will be much better when comparing to spending the time at all the tools. The relationship, quality times is more important, and you only need few true friends, few deep friendship. And work, you need to focus on those productive work that can lead you to the greater result. Okay, now we have talked through how simplification can make our life better. We will go back to trading. Let's look at this practical framework of how we implement all those into our trading. So when it comes to eliminations, the first one is reduce indicators. You don't need that much. For me personally, I'm using only one and sometimes two, because I use the average 2 range to identify the range that the stock can go for within 1 day or within a specific time, because I need to know about, is my stop loss, is my take profit reasonable or not? Because we need to know about the price movement is high likely to move, so we can take profit and make a stop loss within that range. Don't try to just if you want to take a profit of guessing the Tesla to go up $100 in 1 day, that is not realistic. We are need to talk about realistic. So sometimes I will use the ATR to just make my trading realistic. But most of the time I only use one indicator, which is the EMA ribbons, because I needed to identify the directions, as simple as that. So you need to reduce the indicators, and then The second is cut noise. When I mean cut noise, it means that you need to reduce scrolling around all the news resources like the investing.coms, those Twitters, those like Federalist member speaking. You need to reduce all noises. And the third one is stop following every guru. Guru is actually just transfer you the knowledge, but they are not responsible for your trading action, your trading decisions. If you are making a losses, they won't compensate you. If you are making a profit, you won't share to them also. So trading guru only responsible for knowledge delivery, but they are not responsible for your P&L. They are not responsible for your decision making. Trading and investing is a solo game. Your money is all up to you. Okay? And then we will come to automations. How we are going to automate it? First one is we set the price alert instead of just watching the chart all days. Some people might think that the professional traders and investors, they will just sit on the seat and then they will just take a look, monitor multiple screen, and then they will just watching on all those charts all day. But that is not realistic actually. You can just wait until it reacts to a certain level. The area of interest, either if a pivot point or Fibonacci levels, a support resistance, it's all up to you. It's all up to the method that you are deciding on. Even though it's EMA rebounds also can. So you just need to decide at what level you will only look at the chart, and you set a price alert on that level will do, instead of just watching the chart all day. And you need to have a very simple checklist for your trade decisions. For myself, I already talked about that. A very simple direction bias, entry and exits, that, and a very clear risk to ratio, that will do. So the first one, I need to know the direction. If the direction is unclear, I get away from it. So if the first one, I have a very strong bias on the directions, I will only go to the second one. If I found my entry setup, then I will only execute the trade. If I didn't find my entry setup, I will not force into the trade, even though I know the direction. That is my things. And I will just exit the trade no matter how is the price going. Even though it's having a very clear potential upward movement, a very clear profit zone, but as long as I'm having enough money for myself, I will just quit my position. So you need to make your own checklist. And after that, we can have a template for the analysis. If some kind related to the previous one, the checklist, but it's better if you can make a template to analyze your past history trades, so we can know that what is the factor that lead to a successful trade and what doesn't, and what kind of trading setup can bring you a higher win rate, can bring you a higher returns, and then you only focus on those A+ setup. Okay, now afterward we will come to delegate. First one, we will use the trusted sources for news filtering. For myself, I only use the Forex Factory to just monitor those very big news like CPI, non-farms, and all those. So use only the trusted sources. And for e-recording, you can just let the technology to handle your record keeping. Because sometimes if you do the analysis, the trading journal on the book, we don't actually need to do the manual work now. It's a very modern world now, a very advanced world. So we can just let the technology to do the things. I keep all my journaling online on Notion.com. I will also suggest Notion.com is a very good tool to use. And the third one is find a mentor for guidance instead of just trying everything yourself. Previously, we said that don't follow the gurus, which is also true, but I will also suggest you to find a mentor, because a mentor can help you to guide you to just a good mentor can guide you to make your own trading setup, your own trading strategy. They can help you to identify what is your problem, and they can deliver the correct information and knowledge to you. But not those fake guru or those, I would say, arrogant gurus that they're giving us signals and then think that they will be correct all the time. So don't try to follow their judgment, but learn from them, learn of their way of analysis and the knowledge that we have, that they have. Okay, so here come the end of the sessions. For today's classes, we will just recap on the main point. The first one is complexity is the enemy of executions. So just try to make your strategy as simple as you can, and then you can make the execution as fast as you can without any second doubt. You need to train yourself to become, you need to train yourself to let your nature, you have a nature to just make decision at the first glance. Okay. The second is mastering one strategy before learning the others. You need to learn how to walk first before you learn how to jump. So you need to master one first before you go to the other gurus. The third one is a simple risk management will save your account. I always believe that the winner in the financial market is the one who survives until the end, but not the one who wins the most at the beginning. So we will need to become the one who survives longer until we success. We need to keep ourselves successful before we talk about making money and also a very successful traders. Okay. And the next one will be the 80-20 rules, the Pareto rules actually apply everywhere, not even tradings and investing. We can actually apply it to the way of our living. So we can just keep our life simple yet at a very high quality. And the last one is less input often lead to a better output. Even though there are so many things that you do, but most of them doesn't just generate a better result for you. Even though you make so many friends, but when you are coming into a very difficult situation, none of them will help you. So even though you spend many times together with your family, but at the end you find that you actually doesn't know them well. So quality time will be better. And we have covered a lot of ground today, from simplifying the trading until to applying all those principles in our daily life. And now it's about the time to put it all together and create an action plan that you can start immediately. So actually you can just try to just make a very simple trading plan for yourself and try to be dumb, be simple, as don't try to just make everything so complex. Okay, be dumb doesn't mean that it's a bad thing. Be dumb is actually to simplify. Sometimes we don't need a second thought. We just can tell that what will bring us money and what will bring us profit from the chart at the first second. Okay, remember, a chart that can tell you the directions at the first second is always the best trade. Is the chart that doesn't need you to think about it, doesn't need you to have a second thought, is the best trading setup that you can have. So it's not being dumb, it's not about lacking intelligence. We do need the basic knowledge to back us up to make all those trades, to make all those risk calculations. So after we get to know about all those basic knowledge, we can just be dumb, be simple, and choose one trading strategy to master and remove all those unnecessary indicators and start using a position sizing calculation method. So this is the end of the sessions. please feel free to reach out if you have any questions, or if you have some topic that interested and would like to suggest me to have a talk on it. So also welcome. And thank you for your attention today. And remember, in the world of complexity, simplicity is your edge. Okay? Do remember, be dumb, be rich. At the end of the session, I'm just going to share about the benefit of opening a uSMART account right now. When you're opening a uSMART account right now, you're able to get a 0.02 shares of Tesla. And the more deposit that you make, the more cash voucher that you're able to get. And this is the QR for registration. If you are interested, feel free to register and start our trading journey all together. So, do you guys have any questions? If there's not much questions, we will just end our session for today. And hope to see you guys on the next class. And hope you guys can become successful traders someday. Simplify your trades, simplify your decisions, and here's the easy money comes. Okay, thank you for your time. Thanks for all of you. And we shall end the session right away. Thank you.